A new readout on the pulse of the consumer. National Retail Federation reporting retail sales grew modestly in April, with the total sales, including automobiles and gasoline, up nearly 0.3% from March. For more on this, I'm joined by Katherine Cullen, who is the National Retail Federation Vice President of Industry and Consumer Insights. Katherine, great to have you here with us on the show. First and foremost, I read through this report. I looked through some of the line items as well here. Just want to get the broad read right now on what we should be making on the pulse of the consumer.
Well, thanks for having me on, Brad. And what we're really seeing is something we were expecting this whole time, which is a normalization of consumer spending. We're seeing shoppers across income spectrums facing various challenges, shifts in their spending patterns. They're really prioritizing what's important to them. And as we expected, we're seeing a moderated level of spending on goods, though still above what we saw last year, and we're still on track to achieve between 2.5% and 3.5% growth year over year for the entire year.
All right, so as we get towards normalization, what does that mean for the category level? What performs best during normalization and what underperforms?
Well, we know that today's shopper is facing high inflation in some aspects of their life, like services. So they're rebalancing their budget on some goods. They are looking really for value. For some consumers, that means maybe shopping a little bit more discount, maybe trading down to a private label brand, maybe pulling back on dining out, which is a category that we saw performed a little less strongly this past month, in order to spend on some of the other areas of their lives. But we are seeing that consumers are expecting their wages will keep up with inflation. They are expecting to continue spending. And we're even seeing that with some strength in categories like sporting goods, heading into some of the warmer months of the year, as well as home and gardening sectors, as again, we're heading into kind of spring, summertime with people sprucing up their lawns and spending more time outdoors.
Yeah, big green thumb energy there for sure. You know, Katherine, as I think about how the way that the consumer has been defined has shifted over this past 18 months from resilient to healthy, and to now, it seems like the consumer, as we're defining more broadly scale, because it is tiered between high income, middle, and then low income, it seems like on aggregate, we're saying that the consumer is normalizing. Or where is the true definition of that? What is the one word?
I like to use savvy. This is a shopper who is used to balancing their budget, and they're reacting to forces that they're seeing in other parts of their lives. If they see higher prices in one area like gas or travel or health, they're being smart with their money, saying, hey, I'm going to rebalance my budget, look for sales, look for promotions, make sure I can really afford the items that my family needs. But we are really seeing consumers invest in what's important to them, obviously getting through on essentials, but also we're seeing strong spending around holidays and special events, and we are continuing to see spending around experiences. So this is a consumer that still feels comfortable, still feels somewhat confident in their own job security, and feels a level of comfortability continuing to spend. Certainly things can change. We know, obviously, not to get too used to normal these days, but we are seeing this consumer be very savvy, very smart with their money.
All right, I like to be called savvy, so I'll take that. Katherine, thanks so much. Katherine Cullen, who is the NRF Vice President and Industry of Consumer Insights. Great to speak with you here today.
Great to speak with you as well. Take care.